All right. Good morning, everybody. Good morning and happy Friday, all you magnificent melon heads. Today is December 15th, 2023. Top story this morning is the layoffs have already begun at GM. We are just a few weeks removed from one of the largest pay increases in history for UAW employees, even though auto sales are falling off a cliff despite record high car prices because people can't afford cars because interest rates are so high and car prices are so high. Something that I guess the Fed is going to help with their rate cuts. Put a pin in that. We'll talk more about that in a second. Just a few weeks after that big contract increase, the layoffs have started. We've got GM is laying off 13 workers at their plants in Michigan. Notably, 945 of those 1,300 workers are being laid off at the Orion Assembly Plant, where they make the electric vehicle, the Chevy Bolt. More trouble for EVs. Just keep shoveling the subsidies at the EVs. You know what? Here's another billion. Here's some tax credits if you buy one. Here's a few $1 billion to build charging stations. Meanwhile, people keep getting laid off. How is that energy transition, that Green New Deal working out for you? We can't subsidize these things anymore. I mean, the only thing we haven't tried is putting guns to people's head and saying, go buy an electric vehicle or else. That's not a suggestion, by the way. That's meant to be sarcasm. Just these days, you can't be too sure. GM subsidiary Cruise, the robo-taxi company, is also laying off 900 people. That's after a customer in Chicago was dragged 20 feet by one of these Johnny Cabs. Apparently, some of the leadership, I don't know if they tried to sweep it under the rug or what happened, but some executives at the company were fired because of the response to that event. And now we've got a major chunk of that company's workforce is getting laid off. Also, guys, investors are just going all in. There was a fantastic headline in Reuters today that investors have gone all in on the infallible Fed. And I'm just thinking, my God, is this headline not perfect? Not perfect. I mean, 2 weeks ago, let's put this all in context about investors all in on the infallible Fed. 2 weeks ago, Jerome Powell at Spelman College said, we are not even talking about rate cuts. It is far too premature for that. 2 weeks ago, he took the prospect of any rate cuts off the table. Then 2 days ago, Jerome Powell came out and did nothing but talk about rate cuts. He put 3 rate cuts on the table in 2024 with the dot plot. The market heard 6 if you look at how interest rate futures are priced right now. He did nothing but talk about rate cuts at the last FOMC press conference. Of course, that sent markets sky high. And then this morning, New York Fed President John Williams is out there jawboning saying it's far too early to talk about rate cuts, even though his boss just spent the whole press conference talking about rate cuts. And meanwhile, investors are all in on the infallible Fed. These people do not know what they're doing. They just say one thing one day, one little data point comes in the middle of the meeting, they get up and they scramble into the back room and they change their position on the dot plot. And then they come back in and they say rate cuts. And then the next day they say, no, we're not even talking about rate cuts. Well, they're still out of breath from talking about rate cuts the day before. And look at some of these numbers. In the last week, investors have pulled $31 billion out of cash and put $25.3 billion into stocks. Based on the words of these people who flip-flop by the hour, it seems, people have pumped $25.3 billion into the stock market in a week. That is the week to Wednesday. Over the last 8 weeks, $74 billion has flowed into equities. The infallible Fed is juicing this market, even though this infallible Fed could change its mind before I'm done with this live stream, for all we know. Reverse repo took another big dive yesterday. It's down at about $769 billion right now. It is pretty much tied for its all-time low. The liquidity drain continues. Fun fact, guys, I looked at the charts, and if you look at all of the Fed's quantitative tightening, all of the unwinding of their balance sheet, the money destruction that they've done, they've gone from about 8.9 trillion on their balance sheet to about 7.7 trillion, a net reduction of about $1.2 trillion. So the Fed has destroyed about 1.2 trillion. However, during that same time period, the reverse repo has gone from about 2.2 trillion to about 0.8 trillion. So the reverse repo has gone down by 1.4 trillion. Now remember, when reverse repo goes down, that's money on Mars re-entering the financial system, going back into circulation, chasing asset prices. So based on the net liquidity that the market sees, forget money supply, forget the Fed's balance sheet for a minute, just whatever money is sloshing around in the asset market, it's gone up since the Fed has started quantitative tightening, which means we have not yet felt 1 penny of QT because the drain on the reverse repo has more than offset it. We've actually had a net addition of liquidity from the Federal Reserve if you account for the reverse repo decline offsetting the decline in the Fed's balance sheet. Maybe that's one of the things that Jerome Powell is so worried about. Maybe that's why Powell in 2 weeks went from not even talking about rate cuts to talking about rate cuts to John Williams saying, no, not talking about rate cuts. Somebody make up your mind, guys. I'm having trouble keeping track. Meanwhile, China go bird this morning. We've got a net liquidity injection of $112 billion by the People's Bank of China in the form of what they call a medium-term lending facility, which is just basically China's printing yuan and loaning it to their banks to try to juice liquidity in the market. They're still struggling with the decline in their property sector. They also send an obscure message to their companies, their publicly traded companies, pay dividends and buy back stock, or else you can expect additional regulation, which in Chinese communist speak means visits from government people you don't want, knock on the door in the middle of the night, bad things happen. They're trying to juice their stock market higher, and that's not surprising because Chinese don't really trust the stock market. The stock market in China is not an avenue for investment as popular as it is like here in the States. In China, people put everything they have into real estate, and well, that's not going so well right now. And since the 3 red lines policy and the collapse of Evergrande and the decline in their real estate market in China, the average investor has really turned to gold. You've got a lot of gold is flowing into China right now because the average Chinese investor just has nowhere else to put his wealth. And while the last thing an oppressive government wants is its people hoarding gold, and so they're telling their publicly traded companies, start paying dividends, start buying back stocks, so people will buy your stock instead of hoarding gold, which, people who hoard gold are harder for the government to control. And so you've also got that going on. Oh, and 2 more ships were attacked in the Red Sea today. I put out a video last night documenting more than a dozen attacks on commercial and military vessels in and around the Strait of Bab el-Mandeb, or the Bab el-Mandeb Strait, which loosely translates to the Gates of Lamentation. Interesting name. 2 more ships just in it's been about 12 hours since I put that video out about more than a dozen attacks on commercial and military ships, mostly commercial ships, and then the military ships that respond to assist, they're getting attacked. Just in the few hours since I made that video, 2 more ships were hit. So the naval conflict, that is totally not a war. Again, politicians want you to know the war is contained. It's definitely not a war, even though ships are getting hit by missiles and drones. The ships are firing back, intercepting the missiles and drones. Hijackers are boarding and taking crews hostages. But don't worry, guys, it's totally not a war in the Red Sea. Get your act together, politicians. You're running out of time over there. And with that, why don't we shrink my big melon of a head and let's see what's going on in the markets. Guys, don't forget that thumbs up button. Like this video. It helps with the YouTube algorithm. And if you're new to the channel, hit that subscribe button and that notification bell as well. We do this every morning. Have your coffee with the melon heads. Stocks are currently, the S&P is just barely positive ahead of the opening bell, up 4 points. Now, we went with the bear thumbnail when we posted today because most of the indexes, 2 of the 3 indexes were negative and heading further south. You may notice this big decline that started around 8:30 and it ran for about 15 minutes. I'm not sure what that was. That was right around the same time that John Williams from the Fed started speaking. And also we had the Empire State Manufacturing Index came out from the New York Fed. We saw a big decline in manufacturing activity in the New York region. And right around the time of those 2 things happening, we saw this pretty substantial decrease in stock futures. So I'm not sure which one of those it was. We are since rebounding a little bit, just barely in positive territory for the S&P. The Dow, same thing, up 8 points ahead of the opening bell, essentially unchanged. Again, right around 8:30 when the New York Fed came out with the Empire Manufacturing Index. And right as John Williams starts talking, we had a big decline. And ever since then, it's traded sideways with a little bit of an upward tilt. NASDAQ, however, is looking much better, up 58 points or 0.36% higher. Again, you got the same shape of the chart there, but the upward bound here, something John Williams said the tech stocks really liked. I don't know what that was. Looking over at the commodities board, we've got February gold futures are modestly higher this morning. $2,047 for February gold futures. That's up about 0.12%. March silver futures at 24.25. That's down about 13 cents or 0.5% today. We've got platinum is down about 2%. Palladium is up about 2%. West Texas intermediate crude January futures trading at 71.70, up about a dime or 0.17% higher. Not a whole heck of a lot happening in commodities this morning. The U.S. dollar index has been a little bit wonky this morning at 102.43. That's up 48 basis points, which is a pretty modest gain considering the bludgeoning that the dollar has gotten the last few days ever since Powell started talking about rate cuts, which apparently now Powell is not talking about rate cuts because John Williams says we're not even talking about it, even though they just talked about it. Moving on. Again, right around 8:30, shortly after that Empire State Manufacturing Index came out, and shortly after Williams started saying we're not talking about rate cuts, we got a big step up in the DXY. Dollar got a little bit stronger. It's given some of that back right now. We'll see how that develops over the course of the day. And looking over at the bond market, we got yields are higher across the board here this morning. The 30-year Treasury at 4.06. That's up not quite 1 point today. The 10-year is up 2.5 basis points at 3.955. Again, though, talking about a drop in the bucket compared to the more than 100 basis point decline in the 10-year that we've seen in just the last few weeks. The 2-year Treasury is at 4.441. That's up 4 basis points this morning. And the 1 month is back to 5.386. That's up from about 5.35 yesterday. All you T-bill and chill folks that are out there, keep an eye on those 1 month yields as the prospect of rate cuts gets closer and closer. Those 1 month T-bills are going to look less and less attractive, something to consider. But let's talk about the main story here. GM to lay off 1,300 Michigan workers as vehicles end production. Just a couple of weeks after getting a big raise, they're getting a pink slip. GM plans to lay off about 1,300 workers in Michigan starting early next year due to vehicles they produce ending production. The largest of the layoffs were expected. They include 945 workers at the Orion Assembly who built the Chevy Bolt models, which are ending production this year. There's that big energy transition to EVs for you, laying off almost 1,000 people and stopping production. The other 369 workers to be laid off are at GM's Lansing Grand River Assembly and Stamping, which will no longer produce the Chevy Camaro. But that is not the only layoffs in the EV and automotive space today. We've also got GM Cruise laying off 900 employees or 24% of its workforce. The layoffs, which mostly hit commercial operators and related corporate functions, comes one day after the robo-taxi subsidiary dismissed 9 key leaders. Cruise on Thursday announced internally it'll lay off 9 employees or 24% of its workforce. The layoffs primarily affect commercial operations and related corporate functions, are the latest turmoil for the robo-taxi startup, and come one day after Cruise dismissed 9 key leaders for the company's response to an October 2nd accident in which a pedestrian was dragged 20 feet by a Cruise self-driving car after being struck by another vehicle. The company added 3,800. The company had 3,800 employees before Thursday's cuts, which also follow a round of contractor layoffs at Cruise last month. Affected employees will receive paychecks until February 12th and at least an additional 8 weeks of pay plus severance based on tenure. And that last part's important to keep in mind, guys. They'll get severance, additional 8 weeks of pay. As long as somebody is collecting severance, as long as somebody is getting a paycheck from the company they used to work for, they will not be counted on unemployment. So even though we're starting to see these anecdotes of layoffs pile up in the market, they're not going to hit the unemployment numbers for a couple of months because these layoffs usually come with a severance attached. And so they don't go on the unemployment rolls until they've been collecting those benefits for a couple of weeks. Also, this one, and just the most wonderful title I've ever seen, sarcastically so. Investors go all in on infallible Fed, dumping cash and buying stocks, according to Bank of America. Yes, the infallible Fed, from the people who bought you the collapse of Lehman Brothers and the global financial crisis, and then later on brought you such wonderful hits such as not another financial crisis in my lifetime, or God forbid, transitory. Now they're infallible and everybody's dumping their cash and chasing a FOMO rally. Here we go. Investors dumped cash and bought stocks in the week to Wednesday, according to Bank of America Global Research, as hopes of interest rate cuts drove equity and bond prices higher. Interest rate cuts that John Williams says they're not talking about. Investors pulled $31 billion from cash in the week, the first week of outflows in 8 weeks, and put $25.3 billion into stocks. That's what BOFA said in a report released on Friday, citing EFPR data. Inflows to equities in the past 8 weeks totaled $74 billion, the most in an 8-week period since March of 2022, the report said, describing markets as being all in on infallible Fed. What do you guys think about the infallible Fed? Is the Fed fallible? Have they ever fouled? I think they're quite fallible. But you know what? That's just my opinion. I'm just a perma bear. There it is written on my sleeve right there, perma bear. So let me guys know how much foul is going on over at the Fed. Let me know down in the comments. And also, we got this wonderful thing today. Fed's John Williams says the central bank isn't really talking about rate cuts now. Did anybody else listen on Wednesday? Pretty sure you spent a lot of time talking about rate cuts on Wednesday. Actually, John Williams, I'm pretty sure 3 of your colleagues got up in the middle of the meeting and ran to their computers and changed their predictions on the dot plot to add rate cuts to next year. But I guess if they didn't actually say anything about it, maybe they're not actually talking about it. I don't know. This is just another ridiculous case of jawboning. We have one thing happens at the FOMC press conference, and then they trot out these politicians, and that's really what these guys are, these academics at the Fed. I mean, they're talking heads, they're puppets. The people who actually own the Fed tell them what to say, and they go out and say it. And now here they go, walking back everything that was said on Wednesday. Now let's talk about the reverse repo a little bit, guys. This one, just yesterday, the reverse repo dropped by about $54 billion to $769 billion. That is just above the all-time low that we hit last week of $768 billion. It really does look like this downward trend is still intact. We're scheduled to hit zero sometime in mid-February, even though Powell, he did make a couple of comments saying, we're going to get to a level just above what we consider ample reserves, and then we'll start slowing our QT and eventually end it. Now, he didn't say what that level was, but there's not a lot of time to do that. I mean, if he's saying, he's suggesting that they're going to stop QT before reverse repo goes to zero. He didn't use those words. That was just my interpretation of what he said. Others heard that differently than I did. I just want to throw that out there. But if that is what he said he would do, lower QT or stop it altogether before the reverse repo runs out, he's only got a couple of weeks to do that because it keeps dropping. We're sitting here at an all-time low, $768 billion. Now, the other thing to keep in mind, guys, we started up here around 2.2 trillion when they suspended the debt ceiling. And now we're down to, we'll round up to 0.8 trillion. So, you've got a $1.4 to $1.5 trillion decline in the reverse repo. And even though reverse repo doesn't really affect money supply, because when money flows in or out of reverse repo, it doesn't change the M2 money supply. It doesn't change the total amount of money in existence, but it does change the total amount of money in circulation, because when it's in the reverse repo, it's not circulating. It's not chasing assets like stocks or bonds. It's not buying goods and services. It's on Mars. So when money leaves the reverse repo and flows presumably into short-term U.S. Treasury bills, that adds that money into circulation. It is now circulating. It's now chasing assets, bidding up their prices. So the decline of the reverse repo has basically been a net addition of $1.5 trillion of liquidity into the market. Now, while that's been happening, we've got this chart, the Fed's balance sheet, the total number of U.S. Treasuries and mortgage-backed securities that the Federal Reserve owns, and that went from a high of about 8.9 trillion, and that was, like back around April of 2022, to right now where it's about 7.7 trillion. So we've seen a $1.2 trillion decline in the Fed's balance sheet. That is liquidity sucked out of the bond market. But at the same time, $1.5 trillion has been put right back in by the reverse repo. So yeah, they're destroying money. Yes, the money supply is shrinking, but according to the bond market, based on the tunnel vision the bond market has, money in, money out, there's been a net increase of liquidity, which means we haven't even begun to feel the effects of this quantitative tightening. Now, I don't know what the long-term implications of that are going to be, Maybe it's just, the two cancel each other out and there's no change. Or maybe there is this massive thing happening under the hood and we can't see it because of the reverse repo. Maybe that's what scared Jerome Powell enough to do a complete 180 over a span of 2 weeks and start talking about rate cuts, the rate cuts that he's not talking about, according to John Williams. Also going on today, the New York Empire State Manufacturing Index came out. I mentioned earlier in the stream, guys, that this hit the tape right around the time that decline in stock futures started. So it's possible this was moving markets, although the effects of that are starting to wear off. The New York Empire State Manufacturing Index sank to negative 14.5 in December, the lowest reading in 4 months, signaling that business activity in New York declined. I'm not going to read too much into this one, but it was a pretty big decline. We went from a positive 9.1 last month to a negative 14.5. So the Empire State Manufacturing Index is made up of a number of categories, things like employment level, lead times, backlog of orders, input costs, output costs. It's a whole great big complex calculation, but a big decline in manufacturing activity in New York this month. You may notice this chart has been kind of all over the place because this is a month over month change. So I'm not going to read too much into this. The only reason I'm mentioning is because right as this data point hit the tape, we saw the S&P start to head lower along with the NASDAQ and the Dow. I don't know that this was necessarily the cause if it was the Empire State Manufacturing Index, just that it was significant and it bears mentioning. Also going on today, China, the PBOC, go Burr. China's policy combo gives investors hope for a market rally. The PBOC adds the most cash on record with 1-year policy loans. Beijing and Shanghai move to cut down payments for homes. That last thing was kind of funny, to cut down payments for homes. I don't think you need to do that. All you need to do, honestly, if you want to fix the housing market in China, just make them build it before you buy it. That's all you got to do. Don't allow developers to essentially naked short apartments, because the developers, because they do these pre-sales, they sell the apartment before they even build the building. They're selling something that doesn't exist. We have a term for that in stocks. It's called the naked short. And every major developer in China is naked short the housing market. Well, unfortunately, it doesn't really work that way where they, when you're naked short, you can just, you're forced to go build it. And so it creates a short squeeze and the value goes higher. No, that's not how it works in the developing market. The developer just goes bankrupt and you lose all the money you gave them to buy a house. So instead of lowering down payments for homes, just make them build the house before you sell it to them. I just throw them out there. You guys do what you want with it. China's move to pump a record amount of cash into the economy coincided with renewed support for the property sector, sending more powerful stimulus message to investors as piecemeal approaches had left them disheartened. Keep in mind, China had previously released their 31-point plan for addressing the property sector. That's a lot of points. All 31 of them kind of fell flat and the market was not impressed. So now they're trying the fire hose of liquidity, the Fed approach. The central bank handed commercial lenders $112 billion of 1-year loans on Friday, helping to allay concerns over cash scarcity amid a surge in government debt issuance. That came on the heels of a relaxation of home buying curbs in Beijing and Shanghai, an extension of policy efforts to stem an unprecedented housing downturn. And I just want to add this. On Friday, the People's Bank of China offered commercial lenders a net 800 billion yuan, that's $112 billion of 1-year loans, through the so-called medium-term lending facility, while the central bank kept the interest rate on the funding unchanged. It's 2.5% interest. These are very generous loans. The size of the injection came as a surprise, given it was more than twice what had been expected by analysts. So they are just going Burr big time over at the PBOC. Might seem like small numbers by Fed standards, $112 billion, but this is a huge increase and their biggest liquidity injection on record. Also going on today, China is saying, hey, you publicly traded companies, time to start paying dividends and buying back your stock. Regulator urges Chinese companies to boost dividends and buybacks. China's securities regulator is asking publicly traded companies to boost dividends to reward investors and said it will increase supervision of those who don't pay. Pay dividends or expect a visit from the regulators. Message received. China Securities Regulatory Commission, or CSRC, said on Friday it will strengthen the disclosure requirements for companies that aren't paying dividends. It also encouraged listed firms to increase the frequency of their dividend payouts and streamline interim distribution processes. China has taken a tougher stance on firms that refuse to issue dividends to investors over the years. In 2017, then CSRC chairman Liu Xiu said the regulator would take steps against those iron roosters, which have the ability to offer cash dividends, but never plucked a feather. I'm sure that sounds really cool in Mandarin. All I know is, how do you get a nickname like the Iron Rooster? That just sounds so cool. I am the Iron Rooster. Don't make me pluck a feather. That's those iron roosters, which have the ability to offer cash dividends, but never pluck a feather. So, I mean, the message is pay dividends, buy back stock, make our stock market go higher. Otherwise, the regulators are going to come to your house and bad things will happen to you. This is a very CCP kind of story. And last but not least, guys, we talked about this one yesterday. We've got to mention it briefly because let me just tell you, when I made that video yesterday about the attacks on the ships in the Red Sea, it was hard to get that video done because the attacks were happening while I was making the video. Halfway through filming that video, I had to stop and go do more research because there was two more attacks on two other ships yesterday. And well, it looks like there's been two more on top of those two more just since I made the video. This thing is escalating quickly and it is not getting the coverage it deserves. This is a very big deal. Attacks from Houthi-controlled Yemen struck two Liberian flag ships in the Bab el-Mandeb Strait on Friday, a U.S. defense official said, underlining the threat to vessels and shipping lanes being targeted by the Iran-aligned group. A projectile believed to be a drone struck one of the vessels, the German-owned Al Jazra, causing a fire, but no injuries. Still, miraculously, nobody has been killed. Two ballistic missiles were fired in the second attack, one of which struck a vessel, causing a fire, which the crew was working to extinguish, the official said. A U.S. Navy destroyer was on its way to aid the vessel, the official said, without naming the vessel. And if this attack follows the previous pattern, it's a good bet that Navy destroyer is going to have to shoot down drones or missiles that are fired at it as it responds to assist those vessels, as all the prior attacks have previously shown. So this situation in the Red Sea continues to spiral out of control. Two attacks yesterday, two more attacks this morning, over a dozen attacks in the last month. We're getting closer to 20 attacks in a month now. Meanwhile, they're supposedly building this international coalition of naval ships from around the world that are going to come guarantee freedom of navigation. The Iranians have said, don't do that. We've said we're going to do it anyway. The people in charge, the people who are making this world worse, are not taking a day off, folks. That is the lesson there. And I just want to say thank you very much to Nashville Pasta Man. I appreciate the super chat. He says, infallible, you make plans and God smiles. As I often say, that sound you hear is God laughing while you make plans, Nashville Pasta Man. And I agree, infallible. I mean, I'm assuming the infallible was used with a sarcastic tone. I mean, I don't, even the mainstream financial press isn't that ridiculous. When they say infallible and they put it in air quotes, they're using the term mockingly, because these are the people who bought you transitory. Remember, these are the people who told you inflation would not be a problem and it would only be temporary. How's that working out for you? Now, people are dumping, what was it, $25.3 billion into stocks in a week because of something these infallible people said. Good luck with that. As far as I'm concerned, no FOMO. Thank you, Nashville Pasta Man. Appreciate the super chat and support of the channel. And thank you, T-Spin, for the super chat, sir. I appreciate that very much. He says, thank you, Jack, for the daily updates. T-Spin, it is my pleasure, sir. Thank you for the super chat and for the kind words. I'm glad you're enjoying the morning updates. And thank you, everybody else, for your time this morning, for having your coffee with the Melonheads. Thank you to my Patreon supporters for everything you guys have done for the channel. Appreciate that very much. I got links to all that good stuff down below. Oh, Thornton Mellon III just jumped in there right before I signed off. He says, buy yourself an iron chicken sandwich. I'm going to go pluck a feather, Thornton Mellon III. Thank you, sir. I appreciate that very much for sneaking that in the end. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.